the goal of trading is to make money. So whatever you do to achieve this goal is right. This is a 1 hour time frame, and this is GBP USD, and I'll be sharing with you how you can trade using your moving average, which is the moving average on my screen, the exponential moving average 25 and exponential moving average 10. You have come across several indicator cross, but this is different from all that you have come across, and I'll be sharing with you exactly how you can take advantage of this in your trading. If you look at our H4, we always begin our analysis and we say the trend is always your friend, which means you begin your analysis from a 4 hour time frame. But for the sake of this video, everything we'll be doing is on a 1 hour time frame. 1 hour time frame. And our condition number 1 is for us to determine whether price is above the upper Bollinger Band or below the lower Bollinger Band. And the implication of this, as you all know, is that when price is below the middle Bollinger Band, we'll look for a sell opportunity alongside with other factors. So if you look previously, price has been above the middle Bollinger Band. So let's take a walk from here. Condition number 1 is you will always need to wait for your exponential, which is your moving average 25 and 10, to cross the middle Bollinger Band in order for you to determine the direction of your trend. So number 1, price should cross, and your moving averages should cross the middle Bollinger Band. And of course, for this moving average to cross the middle Bollinger Band, it means price has already crossed the middle Bollinger Band. It's a very simple strategy, and once this has happened, it is now established that there is a change of direction. Number 2, what do we want to see then? We want to see price pull back into the moving average. And just in this scenario, we want to see price pull back. It can pull back into this price can pull back into the moving average or below the moving average. But in as much as price remain above the middle Bollinger Band, we are still looking for a buying opportunity. So when price pull to the moving average zone, we'll be patient enough to wait for price to pull back and close above the above the moving averages. And immediately price closes above this moving average, you now pay attention to your indicator window, which is the moving average and the commodity channel index. Now this is not just an indicator based strategy. Remember, we begin by determining trend, and trend is facilitated by price action. It is the movement of price that determines trend. So now, here we have our candle formation. So what we want to see? We want to see either a bullish hammer or pin bar or bearish candle, either a bearish hammer, a inverted hammer, or a pin bar, or want to see a bullish engulfing or a bearish engulfing. These are just the 2 candles we'll be trading. And look at this, what happened here. Price pulled back to this zone, gave us this particular pin bar or hammer, just as you can see. And after this particular one, there is another rejection from this downside and price closes here. So when that was happening, look at our CCI line came to the zone of 50 and was crossing back to the upside. Let the CCI cross, let it curve and point to the direction where you want to take your trade. So with this candlestick validation, just as we are having here, and with this our commodity channel index confirmation, we are into this trade. And you can see how the price went afterwards. So this is our confirmation. After that, again, look at what happened at this zone. Price did what? Price pulled back to where? To the moving average. And when this price pulled back to the moving average, at times one of the double confirmation you will have again is a divergence. When price pull back to this moving average, you can simply pick up your trend line and mark the movement of price in that direction. You can see that because you are expecting price to break out of it. And as that was happening, if you look carefully, you will realize that in between what is happening at that level, we are as well having a divergence. A little bit of it is not too obvious, so you need to train your eye to always identify this pattern. So you can see that there. Then after our price break out of this trend line, and you can see the candles formation, how it formed a pin bar inside that zone. And then look at this one here that was formed finally, another candles formation. And then if you did not make this entry here, when price closes this 50 zone, you should have been in your trade. And this is a beautiful trade that would have been to the upside. So after that particular trade happens, remember I stated earlier that even if price closes below the moving average, as far as price has not closed below the middle Bollinger Band, you are still looking for a buying opportunity. And as far as your moving average have not crossed the middle Bollinger Band, the buying trend still remain valid. And look at what happened. Price pullback here is and here we have this beautiful divergence. And I always told you that every end of a pullback is confirmed with a divergence. What we are trading is a trend continuation. This is not a reversal trade. And look at this, price retests the middle Bollinger Band, first rejection. And if you watch our previous video, we've talked about how you can trade the middle Bollinger Band. You can see first pin bar, second one, and then price move from this zone. So if you watch previous video, you should or can make your entry from these two pin bar, this tracer top, or you can be patient enough for wait for price to close above your moving average, and from there you can see this bullish engulfing candle, this particular bullish engulfing candle that closes above the moving average, and that should have been your entry. And you can see how far price went in that direction. And here again we have another one. You can always pick your trend line, look at this, and mark the zone this way. And again, we have a divergence. You can see this and this. So price gave us a bullish candle, it break it, close here. This would have been your entry. Remember, this keep happening and keep repeating itself over and over again. You can see this. Here again is another divergence. Price around the middle Bollinger band, despite the fact that it went below the moving average. And here we have this rejection, then have this pin bar, and you would have been in that trade. Here is another pullback to the moving average. Price close out of it with this bullish engulfing candle. Should have been in that trade. Using your CCI to validate your entry, your CCI was crossing from the level of 10 and 20. So now in this scenario, price have successfully crossed to the downside. So price is now below the middle Bollinger band. Our moving averages have crossed the middle Bollinger band. So now, how do we find an entry? You will now need a pullback. For you to find an entry now, you will need this. Our CCI should either pull back to 50, and then price will now pull inside the moving average, give you a bearish candlestick pattern, either an engulfing candle or a pin bar, for you to sell to the downside. Or CCI will pull back all the way to 80 zone and 90, crossing down, and price too should have pulled there and then be giving you a sign too, either an engulfing candle or is still giving you a pin bar formation in order for you to sell. Every strategy still remains valid, and another valid way to determine this, price at break structural point, and look at here, we are still having an imbalance. So as you can see, price can as well decide to move into this imbalance to fill it up to 50% before it will continue to the downside. So this did not invalidate what we have done before, but the essence is to make everyone profitable based on the level of our understanding when it comes to comprehending teaching and what the price is all about. There are some that it will be much easier for them to understand using indicator, and some they prefer using their naked chart. So whatever way you can be profitable from trading the financial market. And that is why I've come up with this strategy to simplify things for you. Find what suits you most, backtest it, and adopt it as your trading strategy. And I believe you have found this video valuable. Please do not forget to give this video a like, share, subscribe. If you have not done that, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and see you in the subsequent video.